MPW investors have been waiting all year for a rate cut to come in, and we finally got a 50 basis point cut today. So you would expect for there to be a positive reaction with the stock, and there was for like 5 minutes where it went up. You can see the little blip up from around 2 p.m. on the chart. However, since then, it has just been steadily bleeding off after that. Now, I don't know if this is just fear, because the 50 basis point cut maybe means that the economic projections are not as good for the near term, but lower interest rates is, generally speaking, over a slightly longer time frame, it's good for cap rates on real estate, which means it's good for asset values for something like MPW. And it also makes, by comparison, the yield you get for investing in something like a REIT more attractive. Now, I think maybe the market is still digesting the information or deciding exactly how it wants to react, but it does seem to just be kind of bleeding off for the last little bit here today. So, it is what it is. We'll see what happens going forward. Also, I guess if rates are lower, it might be cheaper for shorts to continue to borrow in order to continue holding on to short positions or even initiating new ones. So that might be impacting, might be emboldening somewhat on that front. So I'm hoping that we can see some return to positive momentum. Obviously, after a big run up, you kind of need to be willing to accept that there will be sell-offs along the way. I still think that the real opportunity here is somewhere above $10 per share, but that's just my sense of things for now. In support of my bullishness on medical properties trusts, I actually recently bought some calls expiring next year on my Moomoo account. Now, Moomoo has multiple options levels, and they make it pretty easy to apply for them. And the decision on acceptance of the application is very quick from my experience. It took me only about maybe 2 or 3 minutes to actually get the options access at the level that I wanted. Also, they have margin rates that are only 6.8% at the time of recording. However, after this rate cut, maybe they could be even lower. At the moment, they're lower than both Robinhood Gold and M1 Plus, which are both paid services that I personally have experience with. So I encourage you to give Moomoo a try, and if you use my exclusive link in the description below, you can get up to 15 free stocks if you fund your account for $1,000. It's also important to remember that Steward is getting wiped from the game board. So these operators are moving into the specified hospitals in the specified regions that are outlined here. There's a full press release actually on MPW's corporate website if you want to read the whole thing. But basically, these companies are going to be coming in and taking over the operational costs of the hospitals, and or benefiting from the operational profits of the hospitals. And there's going to be sort of a ramp up in terms of rent collections, and by 2026 they will be collecting rent that's equivalent to 95% of what Steward would have been paying. So they're not having to take too much of a haircut on rent in order to swap Steward out and get other operators in. And it sort of diversifies them a bit, right? They're not renting out too many hospitals to any one operator in this instance, which means if any one of them has a problem, it's going to affect a relatively small portion of the overall portfolio. Part of the problem with Steward wasn't just that they had problems, it was that there were so many hospitals in the Steward sphere of influence that when they had problems, it created a much, much larger problem than it should have. That concentration risk with Steward was pretty massive and bigger than anything that they had seen previously. So I think as long as they learn from that and move on from that and don't get too far intertwined with another major tenant in the future, and don't let any one tenant get to the point where it can tie up a significant portion of your assets, I think that bodes well for the long-term future of Medical Properties Trust. And I think overall, they have a strong base of assets and what is generally a pretty good business model. And I think it's just the overexposure to Steward is what burned them in this instance. I would also like to remind everybody that when this stock was like $3, there was not a single good word to be found out there without looking really below the surface, or perhaps if you were on my Discord. But all in all, people were super, super, super negative on it when it was $3. Now, after this big run up, suddenly momentum trade of the year, trading below fair value, the short sellers got it wrong. Well, no, duh. Yeah, they got it wrong. Now, of course, we touched 52-week highs not long ago, so somewhat of a bleed off is expected, I suppose. Some people were saying it's overbought. Certainly anybody that got in at $3 is probably tempted to just take their gains for the year at the 6 to 620 level where it's kind of been recently. So I get that, and I won't hate on anyone for taking their profits, but this is still heavily shorted, definitely below its own book value and its fair value, below value of FFO multiple, no matter how you slice it and dice it. Now, I do think that to see the real recovery, probably they need to start inching up the dividend again, which they may be able to do in the next couple quarters as things kind of even out. So looking forward to seeing what happens there. And looking forward to their next earnings and to some of the other deadlines in the coming weeks, especially some stuff going on in October. So just got to keep a close eye on it and see what happens. And I'm sure there's probably going to be more rate cuts coming, which, you know, we'll see how that affects things going forward as well. As always, if you made it to the end, I definitely appreciate you. Make sure you're liking for the algorithm and joining my Discord linked in the description. It's always free and will always stay that way. Also, if you wish to support the channel more directly, you can become a channel member, which prices for that start as low as 99 cents. I'm not doing it for the money. Well, maybe a little bit for the money. Also, if you don't like recurring membership fees and anything like that, you can, of course, also sign up for today's sponsor, which is Moomoo, with my exclusive link. When you do so and you deposit $1,000, you can get up to 15 free stocks and enjoy benefits like options trading and some of the lowest margin rates out there. If you know how to use margin, that is. So, with all that, I want to wish you a very wonderful Wednesday and encourage you also to tune in Saturday, 8 p.m. Eastern, Cash Flow Kings Live. We have special guest Strongman Personal Finance coming on to the channel. That should be a wild ride. Take it easy, everybody.